I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX. For more information, please visit us at powerbandsolutions.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Victor Adair, co-founder of the Polar Futures Group. He's Senior Vice President and Derivatives Portfolio Manager at PI Financial in Vancouver. His website, polarfuturesgroup.com. Welcome back to the show.
Thanks, Jim. Good to be here with you.
Victor, you post weekly trading desk notes on your website at polarfuturesgroup.com, and I see you began your most recent post with, "It doesn't matter until it matters, and then it really matters." Well, what does really matter?
Well, that's kind of one of those hook lines to get people's attention, but I really do want to get their attention. And here's what I'm talking about. Interest rates are going up. And I've been talking about this for months, and it's interesting in some markets, like the currency markets, for instance, it seemed as though it hasn't mattered much that U.S. interest rates have been going up, and certainly going up faster than interest rates in other countries. But it seemed to me that beginning last week, especially in the currency markets, it started to matter, and if U.S. interest rates continue to rise and continue to rise faster than interest rates in other countries, it's going to really matter, because I think it's going to really take the U.S. dollar higher. So why are interest rates going up? Well, let's do the broad brush thing. It's kind of really a couple of things. On the one hand, the Federal Reserve in the United States is raising short-term interest rates, and they're saying to the market, we are going to keep raising short-term interest rates over the next 2 years. They lay out what they figure they're going to do. Data dependent, of course. The Federal Reserve has stopped buying bonds in the market, which they've been doing the past few years as part of their quantitative easing program, and they're actually running down their inventory to the tune of, let's call it, $500 billion this year, and a little better than that next year. Third thing, the United States, with the fiscal policies they've got, the deficits are getting bigger. In other words, like the Fed is selling bonds, and now the government is going to be selling bonds or issuing bonds to try to raise money. There's a demand there for money. It's going to put pressure on interest rates. And another way of looking at it, Jim, is interest rates have been so low, maybe too low, for so long that a lot of things have been built around that sort of continuing forever. And when interest rates start to really rise, or continue to keep rising here, that really puts some stress on the market. So it matters now, and I think it could matter a lot more as we go forward if we continue to have this upward pressure on interest rates.
We'll have more with Victor Adair right after this.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Welcome back. We're speaking with Victor Adair. Victor, the U.S. dollar index hit a 14-year high in January of 2016 and then fell about 15% from those highs. You're bullish on the U.S. dollar. Why?
I'm bullish on the U.S. dollar because I believe interest rates in the States are going to get much higher than interest rates in other countries. That's one thing. Another thing is that right now, speculators in the futures markets have their most bearish position on the U.S. dollar that they've had in 7 years. In other words, this is a window into the mind of the market, let's call it. We can see the market is very bearish to the U.S. dollar because it hit a 14-year high a year and a half or so ago and has been in a downtrend since then, and people have been positioning, expecting that downtrend to continue. And so I think the real reason the U.S. dollar can go higher is because of the interest rate spread. And let me say that in the world of currency trading, it's the least ugly that wins. I know a lot of folks say that are bullish on gold would say, the U.S. dollar is a piece of toilet paper. Okay, well, all the currencies are. So then I'm not talking about the U.S. dollar relative to something else. It's relative to other currencies. So in that game, the U.S. dollar, I think, is going to do better against all other currencies. And something that a lot of people haven't noticed is even though the U.S. dollar index has fallen, as you said it has, in the past several months, I've seen some what I call stealth U.S. dollar strength, whereas the U.S. dollar has gone up quite a bit against a range of what I call second-tier countries, like in the currency markets anyway, India, Russia, Brazil, Sweden, Switzerland, Turkey, Argentina, things like that. We've had the U.S. dollar go up quite a bit. I think the U.S. dollar, there's a real risk here. It can go higher, and here's the real kicker. And if it does start to go higher, there's a lot of debt out there in the world denominated in U.S. dollar, and if you have to repay that debt, you're going to have to start scrambling for U.S. dollars, and in that kind of a market, it would accelerate an uptrend in the U.S. dollar. So there's a handful of reasons right there where I think the U.S. dollar can go higher, and it could actually gain some momentum to the upside if it takes off.
What does that imply for the Canuck buck?
Well, Canada's, let's do this. There's sort of three principal things that determine the value of the Canadian dollar. One is the strength or the weakness of what we call the big dollar, the U.S. dollar. Two is the relative interest rate spread between Canada and the United States, and right now it's at about 60 basis points wide in favor of America at the 2-year level, and that's Canada negative. And then three would be commodities generally. I mean, if I put a chart up on the wall that's 20 years long, and one chart is a Canadian dollar chart and the other is a basket of commodities, you stand back and look at them, you can hardly tell them apart. So commodities, over time, a real important function of the Canadian dollar price. Now, from time to time, there's other things like NAFTA, the debt load of Canadians, that sort of thing, politics, whether somebody likes Trudeau or doesn't like Trump or whatever that comes to bear. But the two key things are the strength and weakness of the U.S. dollar and real interest rates, particularly, for the U.S. dollar and Canada, that are going to pressure or support Canada. I'm negative Canada. And by the way, when I say, I can talk like this and have a longer term time frame, and yet a lot of my trading I'm going to do on a much shorter time frame. I'll have let's say a thesis that the U.S. dollar is going higher, and I'll generally look for opportunities to trade it from the long side. That does not mean that I am always, long of the U.S. dollar. I'll trade in and out of these positions, and my going in and out is driven very much by my risk control, my risk management. My job, as I see it, is I have my views on the market. I take positions. I take on risk with the objective of making some money. If I don't like the situation at any one point in time, I'll step back out of the market.
We'll have more with Victor Adair right after the break.
Vadic Ventures Corp is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vadic's management has extensive potash exploration and development experience in Thailand. Vadic will have marketing advantage compared to Western producers. Drill program commences this spring. Vadic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vadicventures.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Victor Adair. Victor, given that you believe rising interest rates in the U.S. may be a catalyst for a rising U.S. dollar, how high do you think those interest rates could go?
Well, that is the $64 question, because as they go higher, it's just going to turn up the heat on people that are trying to deal with rising interest rates. So, I mean, really big picture, I would say the greatest bubble market, we've had ever has been in borrowed money. Debt. Everybody and his dog is in debt these days, and that seems to be normal. You don't buy a car that's cost $50,000. You buy a car that you can get for, $473 a month or whatever it is. How high can interest rates go? Gee. Well, I certainly lived through and traded through the time when Paul Volcker came into the market and Treasury bills were yielding whatever it was, 20%, and the long bond was 15%. I don't know. What I do know is I'm going to have the view that interest rates can keep pressing higher, and the more they press higher, the greater the stress is going to be. I would also anticipate that as interest rates rise, weaker credits start to struggle. So therefore, like the spread between junk bonds and treasuries is going to widen, that kind of thing. No, I will give you what I think is the bullish argument for bonds. In other words, that interest rates, don't go up that far. And that is that as interest rates rise, it'll kill the economy. And if the economy gets killed, then interest rates have to fall back down again. We'll see. I think right now, in the driver's seat is rising interest rates. And I think maybe over time, whatever that means, a couple of years, I think interest rates could go substantially higher if, that kind of thing. What can I say? You can have all kinds of long-term opinions. It doesn't really matter much. Just let's take it, like a week or a month at a time as we go along. I think interest rates are on a trend to go higher.
A strong U.S. dollar and rising interest rates usually not a good environment for gold. Does gold fall from here?
Yeah. I know you've got a lot of listeners that are sort of bullish gold, and there's good reason for that. But from my trading perspective, yeah, you nailed it. I mean, probably the most important variable in the gold price is the relative strength of the U.S. dollar. When you're looking at, the U.S. dollar price of gold, real interest rates are really important, and if both of those things are rising, yeah, that's a tough environment for gold. Now, we could get to a point where people are seeing the stresses in markets and fearing, the worst and looking for a safe haven, and then, gold catches a bid. But I would hazard that in the near term here, if U.S. dollar is rising and real interest rates are rising, as certainly they have been here in the last few days, that does put pressure on gold.
Well, for the last few years, the stock market's been doing great, but do you think the good times are over?
I've been trading the stock market this year on the thesis that that break we had at the end of January, beginning of December, was more than just a little buy the dip opportunity. I think the complexion of the market, the stock market, has changed. We've had a 9-year bull market in, let's call it North American stocks, but basically stocks around the world. During that 9-year period, by the way, the dividend yield on the S&P 500 was greater than the dividend yield on the 2-year Treasury, what we would call the risk-free rate of return. And that's not the case now. Rising interest rates. So we get the 2-year here at about 2.45, and the dividend yield on the S&P, forgive me, but it's about 185. So, if somebody's nervous about the stock market, and they say, instead of hanging in there for the dividend yield, let's get out and we can park safely, in a 2-year Treasury and get paid a premium to what we can get on the dividend yield. And also the market is obviously massively long. I mean, a lot of people have been buying stocks the past few years, and certainly one of the reasons has been, there wasn't much return perceived available in the credit market. So I think the stock market could, if the stock market was 10 or 20% lower later this year, I wouldn't be the least bit surprised. But I think it's going to be a choppy trading market as opposed to what we've been used to, where it just kind of goes up and up and up and up. That's how I'm approaching it.
What do you think is going to happen with crude? I mean, 4 years ago, it was less than $20 a barrel. Now it's around 67. Is it going higher?
Well, yeah, I think if your listeners have heard me before, they know I've kind of had a bearish bias on crude oil. And a good part of that bias, I mean, you develop a bias. I made some very good money being short crude oil, 2014, 15, 16, and on and off from then. I'd say the rally here up to close to $70 on WTI has surprised me. So haven't put those caveats out there. I'm looking for crude oil to turn around and go lower. I think maybe we put on $10 anyway recently with what we would call geopolitical risk, and that's, will Trump re-sanction Iran, will this or that happen? One of the reasons the market has risen is because the thought has been that the cutbacks in total OPEC and friends production has been easily what they said they were going to do, and has been enough to bring the global inventories back into some kind of balance between supply and demand. And those cutbacks from OPEC production have been, in good part, from places like Venezuela and Libya that are just struggling to produce these days. American production just keeps rising, and I think it's blowing a lot of estimates out of the water as to how fast it's going up. I see Joseph Schachter, very good friend of mine, just out today. He thinks the Americans, which are now at about 10.5 million barrels a day, could be hitting 12 million barrels a day by the end of this year. Now, Joseph's been bearish on oil, and, there's a good reason to be bearish. If we were at 12 million barrels a day in American production by the end of the year, that is going to turn upside down the supply-demand inventory story. So, and here's another thing. The speculators are massively long crude oil. Okay, they've been massively long crude oil for a while. But it's like the tinder is laid there. If we get a spark and the prices start to fall, you can get a snowball effect. Also, I'd say if there was a breakdown in the stock market and or the U.S. dollar is rising, then the U.S. dollar price of crude oil would be under pressure. So I'm looking for opportunities to trade it from the short side, and I will give you one last however. However, I have seen that there is what I call a relentless bid in the crude oil market. It may be market manipulation. There are people out there in the world, countries, that would love to see the price of crude oil higher, and they may have come into the futures markets and goosed the prices up. It may also be that there is long-term money, think pension funds, sovereign wealth funds, that sort of thing, that are looking at the ratio between the prices of stocks generally and commodities, and they see that commodities are at a lifetime low relative to the value that we're putting on financial assets like the stock market, and those long-term people are saying we ought to take some profits from the stock market and buy commodities. Maybe that's happening. I'll tell you, it's a wonderful trading environment out there. This is kind of like my kind of market. I love this sort of price action.
Victor, thank you so much for chatting with us.
Tim, I just got half started there. I got wound up. It's always a pleasure. Thank you for having me on.
My guest has been Victor Adair, co-founder of the Polar Futures Group. His website, polarfuturesgroup.com. If you have any questions for Victor or any of our other guests, you can send them to info@howstreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.